Hi and Assalamualaikum to my fellow friends and our lecturer Dr. Majan for the guidance and support throughout this course Math 253. We are from REC 1245E. My name is Muhammad Nuruddin bin Mardan and today we are going to discuss about case study question C and article about small and medium sized enterprise. The study case question is about investment appraisal. So investment appraisal is the process business use to decide whether a long-term project is worth investing in. It evaluates costs, risks, and expected returns using methods such as payback period, net present value, and internal rate of return to ensure decision maximize value and align with business goals.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurhasana Ishira and today I will discuss about how to calculate initial outlay and annual cash flow. So for initial outlay, first we need to take the new machine cost, which is 550,000 plus installation cost and delivery cost. After that we will get 830,000. Then we need to plus with the increase in inventory, which is 90,000, and then we will get 122,000. After that we need to minus the cash flow, which is proceed from the sale of old asset, which is 180,000. Then minus tax loss, which is 25% multiplied by 78,000. Then we will get 19,500. After minus all the cash inflow, our initial outlay is 722,500. Next, to calculate annual cash flow, our question is a differential cash flow, which is why we have year 1 until 2 and year 3 until 5. So first, we need to plus increase in sale and decrease in labor cost. After that, we need to minus the operating cost, which is increase in maintenance and rent. Then we need to minus the depreciation, which is old new machine depreciation minus old machine depreciation. After that, we will get net income before tax. Then minus tax, which is 25% of the net income before tax. Then we will get net income after tax. After getting net income after tax, we need to plus with the depreciation, and then we will get the answer for our annual cash flow, which is for year 1 until 2 is 231,000 and 250. So for year 3 to 5 is 233,500.
My name is Alisha Hadija and I will be explaining the method to calculate terminal cash flow, payback period and net present value. Terminal cash flow is the last stage of project cash flow. To calculate it, we need to add up the salvage value of new machine and increase in inventory. But since there is no salvage value for the new machine, our terminal cash flow is 90,000 based on the amount of increase in inventory. We will move to question B1 where we need to calculate the payback period. Payback period measures how quickly the firm can recover its initial outlay. It is the number of years needed for a project to return its initial investment. The initial outlay is 720,500. For year 1 onward, the project generates annual net cash flow. By the end of year 3, the cumulative cash flow is still negative 24,500. To find the exact payback period, 3 years plus 24,500 divide by 233,500. This equal to 3.1049 years, approximately 3 years. Question B2 asks us to calculate net present value. Net present value is the difference between the present value of the project annual after tax incremental cash flow and its initial investment. To calculate it, we are using 12%. After discounting all the present value, the total present value is 888,984. Then we subtract the initial outlay of 720,500. The NPV is 198,484. Since the NPV is positive, the company should accept the project. By accepting it, The value of the company and hence the shareholder wealth will increase by 168,484.
On question B, internal rate of return is the finding discount rate until it's equal to zero or negative value. So in our answer, we got the negative value at 24%. The amount is 52,028, and the closest positive value is 20%, and the amount is 10,539. And to use formula IRR, we put the positive percent plus the positive value divided by positive value minus the negative value and time with 4%. How we got the 4% is 24 minus 20, and we got our answer is 20.67%. On question C, we need to justify with three reasons whether Medcare Pharma as the MBHT should purchase a new machine. The first reason, uh, Medcare Pharma should purchase a new machine because the net present value is positive. The value is 168,484. The second reason is the IRR. We got the 20.67% is higher than the 12%. And the third reason, even the payback period is 3 years, and we got the 3.1 year, and we should think Medcare Pharma purchase a new machine.
What is SME? SME or small medium enterprise is a business based on factors such as the number of employees, annual sales turnover, or total asset. The role of SME is to create employment opportunity, support economic growth, encourage entrepreneurship, provide goods and service, and promote innovation. Although many Our issue here is although many financial support are available for SME in Malaysia, many SMEs still find it difficult to get bank loans. It is because banks say that SME do not qualify. This creates a funding gap or lacuna where there is a mismatch between the money SME need and the money bank are willing to provide. Most study focus on SME problem in getting fund, which is the demand side, while there are only a few study about the bank side supply at the bank side, which is the supply side, because data from the financial institution is hard to get. This article discuss about the SME funding gap in Malaysia by focusing on both demand and supply side.
Next, I will be explaining about SME issue from demand side perspective. Based on conceptual framework, if markets are efficient and information is complete, the size of the company has no effect on its ability to raise funding since there will be a price that cover the risk. SME face greater financing obstacle along the capital structure spectrum, and this obstacle have nearly twice the effect on SME growth compared to larger enterprise. Banking system underserve SME, causing SME have limited access to export, leasing, and a long-term finance. One of the issues SME face to obtain finance is difficulties to obtain financial resource, especially during the seed, startup, and growth. Factor causing SME funding gap is background of SME borrower, availability of funds, and accessibility of financial service. Researcher agrees that it is not easy to define the access of problem. Dimension of access to finance is availability, convenience, cost, continuity, reliability, flexibility, range, type, and quality. Next, many SME lack financial knowledge or cannot afford market interest rates. Government intervention are needed to improve the access to finance and create a support legal and financial framework. There are two types of information used by SME. Difference in lending infrastructure are a key reason why SME face financing difficulties. First is hard information. For example, financial ratios and credit scores. Large institutions have an advantage at transaction lending, and this information is easy to observe, verify, and share. For soft information, the example is SME owner character and knowledge of the local community. Banks that focus on SME have an advantage in relationship lending, and this information is difficult to observe, verify, and share.
For the review and summary from supply side perspective, SME many difficulty obtaining bank loans due to the supply side constraint. Some of the main problem are first cost effectiveness issue. Bank prefer larger loan because processing costs for the bigger loan and the small loan is similar. Larger loan also reduce cost per unit for bank. Also, SME usually require smaller loans, making them less profitable for the bank. SME finance institutions face high operating costs and lower profit margin. Next, information asymmetry. SME often lack proper financial record and credit history. This incomplete and inaccurate information increase lending risks. Bank also cannot fully assess the borrower risk or monitor SME after lending the money to them. Next, adverse selection and moral hazard. Unequal information from both sides will lead to the adverse selection, which is riskier borrower being selected, and moral hazard, which is borrower taking higher risk after receiving loan. This issue caused bank to limit their lending to the SME. Last but not least, challenge faced by bank in SME lending. Providing financial service to SME require evaluating whether borrower can repay loans on time and whether they have the skill to run their business to get profit to repay the loan back. SME finance staff also have limited previous experience, which lead to the lack of proper financial record and credit history.
SME issues review and summary of article Funding Lacuna in Malaysia, Excess Supply versus Unfulfilled Demand. Number 1. Demand side issue. SME face internal weakness that limit their ability to obtain formal financing, such as in information asymmetry, reliance on internal funding, low financial sophistication, weak collateral position. SMEs often lack proper financial statement, credit history, and transparent record, making risk assessment difficult for lenders. Number 2. Supply side issue. Supply side issue arise from financial institution constraint. SMEs are often seen as high risk due to their small scale, leading banks to adopt conservative lending behavior. High transaction costs small loans less attractive, while banks prefer hard information such as financial statements and collateral. As a result, credit rationing occurs through limiting loan amount and higher interest rates. Overall, this constraint reduce SMEs access to financing and widen the financing gap.
On the third point, structural depends on banks. SME are highly depend on bank as their main source of financing. DFI Development Financial Institution is the providing long-term finance for strategic economic sector like SME that commercial bank always avoid due to a higher risk. That's why it contributes small share to the SME, 2.7%. The fourth point, policy effectiveness and limitation. The Malaysia has introduced many policy response on both demand and supply, but still have a structural issue because the not effective policy. The number five is persistent SME financing gap. The availability of many funding schemes. The gap exists because there are mismatch between supply and demand institutions. The five The fifth point, persistent SME financing gap. The availability of many funding schemes. The gap exists because there are mismatch between the supply and demand institution fund. Many SME cannot be banked due to weak financial profile and high perceived risk. At the end of our presentation, we can conclude that the main issue is the both demand and supply and the banking side. SME are often not bankable and bank face risks and cost constraints. Thank you for listening our presentation video.